Alright, what is going on, everybody on YouTube? Griffin here, coming back to you guys with another live stream from the Millennial Motivation Entrepreneur YouTube channel. First and foremost, before we get going, if you're new to the channel and joining us for the first time, we'd love to have you here and joining our community. So definitely consider hitting that subscribe button below and hitting the bell icon. That way you'll be notified every time we go live and upload another video. If you're new and don't know much about the channel, we go live every Sunday, and I'm trying to go live 2 to 3 times a week in the future, but for now we're just going live every Sunday for sure, usually about an hour or so before the futures market opens up Sunday evening. And like I said, in the future, we're going to try to be more consistent about going live sometime between Tuesday and Thursday, probably like twice a week. And then eventually I want to also do one on Fridays as well, just as kind of like a weekly recap type of thing for the trading week. But with that, I finally got all of my funds, so to speak, that at least I'm trading with, transferred over to TD Ameritrade. As most of you guys that tuned in last week know that I was talking about the plus and minuses of just like TD Ameritrade versus Tastyworks and all that. I still love the Tastyworks platform, but just for many reasons I'm not going to get into, I just decided to go ahead and go with TD Ameritrade. And we put $1,500 in. So for this week, we were up not a lot, about $22, $23, and we do have some positions on hand. If we get it pulled up here, so as you can see, we bought very, very small positions, which we'll be talking about, just obviously how to profit in a bear market and all that stuff here in just a second. But I just wanted to kind of catch you guys up first. So like I said, keeping it very, very small right now. We have just 2 shares of DAL, Delta Airlines, just 1 share of JP Morgan, 1 share of Coke, 5 shares of Nuri, I can't pronounce the word, cruise line, SDOW, which is obviously just short the Dow Jones Industrial Average, just 1 share of that, and then we have 1 share of Target, and then you can see like what the profit losses are. If it's in parentheses or whatever like this, then it's down. Like the DAL's down about $4, JP Morgan's down about $1, Coke's down about $1 or 2, NCLH down 20 cents, and SDOW up 661. Not a bad profit at all right now on that. Just 1 share, of course. And then Target, we're up a little bit as well, up about 3 or 4% roughly. So again, keeping it really small, you can see my total buy power effect is only $230 out of my total $1,522 available. And then like I said, we're up about $22, $23 so far. And I think by available dollars, it means like that I could pull out of my account, if you're wondering about that. So I'm still learning the whole actually trading on Thinkorswim. This is the first time that I've actually used them to actually do my trades. I've used them for charting forever since I've been trading the last few years. But now I'm using just them for everything. And I will say it has made life so much easier in many aspects. And I've definitely liked it so far versus hopping back and forth from my Thinkorswim app to Tastyworks and so on and so on. So with that, we'll just get to the point. I have a couple notes and whatnot just to kind of keep me on track for this stream and whatnot for you guys. And of course, if you all have any questions or if you have any stocks even you want me to take a look at, definitely feel free to shout it out in the chat. Before we get going, I just want to make sure we're up and doing all right. It looks like we are live. Apparently YouTube hasn't sent out the notification that I went live yet, and I know I just posted the stream in our Discord group chat, which if you're not in there, a link's in the description box. If it's not working, let me know. Sometimes I have to update it. It's totally free. I don't charge for anything, obviously, associated with this channel. There's like 150 of us in there now, so it's just awesome to network with a bunch of like-minded people. But, so, okay, to the whole point of just profiting in a bear market. So, I'm pretty much just going to list them off one by one, and then we'll kind of just dive into each one. So, there's pretty much like 5 or 6 just points that I wanted to hit on, which is, one, just keep a small short position within your account in a bear market. And like I said, we'll dive into all these in a second, but just keep a small short position. As you all know, I have just one share of SDOW, super small position. And I mean, small, obviously, goes into just how big is your account. If your account's 10 grand, then I would say small defines as $500 or less. If your account size is like mine right now, 1,500, small somewhere around $100, $200 at the absolute most, somewhere around $100 or less. That position I have, it's like 40, I forget, like $45 or $48 of buying power, somewhere around there. Might even be a little less, but $50 roughly. But again, keep it small. Number two, find the hardest hit industries, because with every bear market, there's an industry that gets hit the hardest. Like in 08, 09, it was obviously the financial markets. Right now, it's obviously cruise lines and hotels, airlines, those type of things. So you want to find the hardest hit sectors of the economy, and obviously filter out which ones are obviously going to go out of business, filter the ones that are obviously more likely at least going to prosper for years to come, and you'll want to look at like low PE ratios, all that type of stuff. Number three is obviously just continue to add to all of your accounts. This is just basic stuff right here, obviously. Like, just add to your long-term stuff. So that'd be like your Roth IRAs, 401ks. Buy more of those index funds, mutual funds, all that. Just the longer-term stuff, because it's all about dollar cost averaging. At the end of the day, you don't want to sit with cash in a market like this. You want to start putting your money to work little bit by little bit. Number four seems obvious, but we all forget whenever the market's just tanking. Don't panic sell. Even if you're down 10, 20, 30%, that's the time you should be looking to buy, not looking to sell, of course. And then don't chase a dead cat bounce. There's a lot of people who have gotten caught this week chasing the dead cat bounce that we all knew was coming. I mean, if we go and just look at the overall market, we'll pull up the Dow Jones, for example, here. If we take a look just at we'll just do 180-day chart, you can see obviously we topped out around 29. Actually, let's pull up a daily chart because it looks better. 29,500 is where we topped out, and then obviously we just tanked. And you knew when we slid like this, we were going to have some sort of a technical bounce. You're not just going to obviously just keep selling without any type of bounce. And we've had a hell of a bounce. I mean, we bounced somewhere around like 20% in a period of 3 trading days last week. So no one should have really been surprised that we were down, about 3 or 4% on Friday. And it would not surprise me one bit if we actually open up down tonight, going into tomorrow, and maybe even a couple days this week. Do I think we're just going to continue this downward, just huge 8 to 12% swings to the downside on an almost everyday basis? No, I do not see that. I think we will probably retest that 18,000 to 19,000 range on the Dow, which is only about 2,400 points from where we are right now, which is a solid drop still. But I don't think we're going to drop to like 15 or anything like that. I'm really starting to think the max pain here will probably be 16 if we break our recent low. If we break the recent low, I think we're going to 16. But I'm pretty confident that low is probably going to hold, and I think we're probably going to come close to retesting it. If we make a higher low, then I think we're going to slowly just start grinding our way back out of this bear market, and then probably, obviously, within the next 6 to 12 months, you'll probably see the Dow back between 25 to 30,000 easily. But the whole point, like I said, just don't chase the dead cat bounce. A market that makes you chase it is not a market that's worth investing in. Cannot stress that enough. And then obviously at the end of the day, if you feel in doubt just about the market or about any investments, just nothing seems too attractive to you right now, you feel like we're on shaky grounds, then just stay in mostly all cash. That's kind of what I did for most of this week. That's why I have really no positions in relevance to, I got a little bit, obviously, $230 on a $1,500 to $1,600 account. That's roughly 1/7 to 1/8 of my total account size that I'm trading with right now. I'm just slowly buying in. I'm slowly looking at stocks that I like longer term, stuff with, if possible, with dividends like JP Morgan, Delta Airlines, Coca-Cola, obviously. Target even has a little dividend as well. And just looking for those companies I know longer term, they're going to come out of this. They'll probably even prosper. Like, I love Target right now. I think Target, a decent price target for Target for in the next year would probably be somewhere around $125 to $140. So I mean, if you bought it right now at between 90, apparently it's at like 95 right now. So if you bought it at $95, for example, which by the way I think you'll get it for around what I got it, 90 to 91 is probably where it's going. Maybe it might not, but let's say you got in between 90 and 95, and it goes up to, even on the low end, let's just say 125, which I think is definitely going to happen in the next year. And again, this is anything I say, it's not like suggestions for trading advice, investing advice, none of that. This is just me just saying like what's going through my mind when I'm making my specific decisions right now. So do not like take it as actual like advice, but again, let's say you got in at $95 and went up to 125. That's a $30 profit per share divided by, again, let's say you got in at $95. Boom, that's a 31.57% return on your money. And again, I think it's going to happen in like 6 to 12 months. It might happen sooner, but I'm betting within 6 to 12 months, Target will probably bounce back a solid 30%. And honestly, that's probably what the broader markets will do. They'll probably jump at least 20 to 40% in the next year or so. I've been saying it for the longest. Once this virus goes away, you're going to see the market bounce like it never has before. It's going to make the 2018 V bottom look ridiculous. That's just my 2 cents again. But yeah, like I said, you just want to keep it small. Just slowly, like me right now, I'm kind of shaky on the market. Like I said, I don't feel like a market that makes you chase it is necessarily one to get in. And if we just look at the 5-day chart overall, or actually let's pull up the 10-day. 10-day, 30 minutes. So you can see we went from around 18,000 all the way up to 22,500. That was literally about a 4,500 point bounce on the Dow Jones. I mean, that is a crazy bounce. And we had that in a period of like 3 or 4 days also, keep in mind. So that is definitely chasing. That is why I personally didn't do much this week. Like I said, obviously I was transferring funds into TD Ameritrade, but I really didn't do a lot in terms of trading. I had a few trades, but there was just nothing. I mean, everything just went up like 10-15% in one day, and you don't want to get caught chasing it. So I was like, you know what, I'm going to let the market, it's going to pull back at some point here in the next week. We saw a little bit of a pullback on Friday, so I started nibbling a little bit because obviously you're never going to time the market to an exact T. So if you just slowly nibble all the way down, and this is for people that are more so long-term investing, which this channel is not like 100% like just trading, just swing trading, just futures or options or investing. This is just overall, like this channel is overall just how to make money in the market by any means necessary. No matter if you're in a bear market, bull market, a neutral market, which obviously we're never in a neutral market at the end of the day, really, or if we are, it's not very long lived. But we want to make money long term, obviously. So this advice at this moment is more geared towards the longer term swing traders, investors, so to speak. But even you day traders, like you guys that are trading stocks, options, that kind of thing, you definitely, if you're doing the option side of things, I would say this is the perfect time to do like iron condors, vertical spreads, those kinds of things. I would not do calls and puts just simply because the premiums are so, as I'm sure most of you know by now, the premiums are through the roof. I mean, even on weekly options on SPY, which is one of the most traded ETFs when it comes to options, the premiums on weeklies are like $1,000 plus, which is usually what it is for like a monthly or bi-monthly contract, to put that in perspective. So I mean, the premiums are just through the roof on those options. So in my opinion, it's really not a smart time to be buying just calls and puts. It's a better time for like vertical spreads and all of that. But I could bounce around on these different things all day. But the whole point is, I think now is an amazing time for people to be kind of reevaluating, taking a look. Even if you're a day trader, there's a good chance you still have retirement accounts, IRAs, 401ks, that kind of thing. Now is a good time to really evaluate kind of what you're invested in, put more money in, and just slowly nibble at the end of the day. I mean, like I said, I have such small positions right now, and I'll be looking to add to them here in the next week or two for sure. But let's see, what point were we on? Like I said, you want to keep a small short position. S-Dow is the one that I tend to play the most, just because it's short the Dow Jones. Another one I play a little bit is SPXX. It is it goes opposite S&P 500. These two are 3 times leverage, meaning whatever way the market moves, these are generally going to move about three times more volatile. So if the market goes down 2%, you're going to see these go up about 6% most of the time. As you can see, these were up 8.5% on Friday for SPXX. SPXS, say that over and over. And then S-Dow, I think, was also up is actually up about 11%. And that makes sense because the Dow was down about 3.25. So that puts you right around 10 or 11%. So these are good to hold. You don't want to hold these long term or anything. Like I said, these are just hedges for like I said, you're nibbling, you're slowly buying into the market. If you're kind of iffy about where you think the market's going to keep going, it's definitely a good idea to have some sort of short position, just a little one, just so you can at least make a little bit of money if the market continues to go down. And if it doesn't, if the market starts to shoot up and then you just start to buy some stocks and whatnot, then you can cut that position obviously for a very minimal loss. Just you're talking dollars if you keep that position small. Get a quick drink here. And before we keep going, hopefully the stream's doing all right. I see we got 3 of you tuning in. If you're all just tuning in, like I said, if you have any questions or if you have any stocks, of course, that you want me to take a look at, just shout them out there in the chat. I'll definitely be willing to break down any stocks today, because this is more so we're talking about just how to profit in a bear market, how to make the most money off of a bear market, that kind of thing. Now's the time we're definitely looking at a lot of stocks and whatnot. So if you have any stocks or anything like that you want me to take a look at, definitely feel free to ask me and we will take a look. But as for my short position, for example, I am in just one share, a tiny position in S-Dow, and I actually sold some of those. I had, I think, 4 shares, if I remember right, 4 shares. We sold 2 of them, then we sold a third one Friday as well. So you can see I got in at 45 on the one position I have left. It's in at $45.10. We're up at 51.71. And my price target is between $58 to $60. Why is that? Because when we take a look just at the last couple weeks where it's been trading, you can see kind of right around that $58 to $60. I mean, you can really say 63 really, but between that $5 range of $58 to $63 was acting kind of as a support as the market obviously kept going down. We hit a high of almost $96. Before the market obviously started going back up. Now, a lot of people are predicting that, we might test the lows. And if we do, that means that obviously S-Dow would come back up to between $90 and $95 more than likely. Me personally, I'm obviously always more bullish on the market than bearish. So I'm leaning more towards, I don't think necessarily we're going to test the lows, but we'll come close. But I think we're going to make a higher low, and then we'll obviously continue to slowly grind our way out of a bear market. So I set an alert at 58 just to kind of let me know, because if I'm at work or whatever and the market starts to tank, then I will be ready to kind of monitor this position. I think 58 is where we will start seeing some resistance, since that's where we did throughout the week this last week. And if we break through 58, then I think we'll definitely fill that gap to about that $60 to $65, $63 price range. And honestly, if I can get somewhere between $63 to $70, maybe even $75, depending on, again, just how violent these moves get this upcoming week or two, then I'll look to get that out of it. But again, we're talking dollars at the end of the day. It's just a little hedge against my total portfolio. And if I'm in at 45 and I sell it for, say, 70, it's just going to be a $25 profit. Nothing crazy at the end of the day. Just, again, trying to make a little bit of money while we continue to average into companies that we like, companies, ETFs, index funds, all that we like longer term. And if you're wondering why I'm not talking about the futures market as much, I personally wouldn't really be touching futures too much right now. One, most of you probably know by now, margins have been increased pretty much across the board, no matter who you trade with, like margin requirements and whatnot. So, like for let's go take a look at MES for a second, because I know a lot of you guys trade that follow the channel. So, like, let's say, for example, we wanted to trade MES. So, if we want to do that, look at the price now. $1,300 is what it would cost for us to trade MES, where before obviously it was hovering right around that $700 price range. So they've increased it across the board. I don't know for sure what it is on ES. I'm pretty sure they raised it on ES as well. So it's $13,000 now. It's just not worth it right now, in my opinion, unless if, of course, you have like hundreds of thousands of dollars in your account, which if you do, you're probably not watching this channel. But if you do, then by all means, feel free to do it. It's just, in my opinion, it's just not really best timing. And again, that's just my opinion. If you want to trade MES at $1,400 per trade, feel free to do it. Just for me, at the end of the day, as volatile as this market's been right now, I just don't want to play it personally. I would rather just buy some stock, buy something that I can hold longer term and I know it's going to go up. And I actually made kind of a newer watch list. So obviously I have my companies and whatnot that I like longer term. I have my futures one, and where is my... Trying to figure out where my other watch list is. Let me just add it in here. Watch list, default. See, I'm still figuring out how to use the whole watch, the whole watch list things. I cannot seem to find my watch list. Let me see if I can import. No. So I forgot how to change my watch list, apparently. Let me see. There we go. No, I don't want to delete it. So I made one specifically with ETFs, if I recall. So there we go. Okay, there we go. Now we got it. So I actually made a list of just general ETFs. Like, these are for those of you that you're tuning in probably because you're probably in like your 20s or 30s, maybe even 40s and whatnot, and you just really started investing in the market and whatnot, and you're trying to figure out kind of like, with a little amount of money, $1,000, $2,000, however many dollars you may have, what you should be looking at longer term. Because again, like I said, we're looking at just total how to make money off of a bear market at the end of the day. It's not just make a quick dollar day trading or even swing trading, even though a lot of trades we do are considered swing trades. If you're looking longer term, here's a list of like just ETFs and whatnot that are very, very low cost. Most of them are Vanguard. Anything that starts with the V on here starts with is a Vanguard fund, and they have the lowest expense ratios, all that stuff, and they follow the market. The main ones that people tend to invest in the most, and I'll do a video specifically geared towards like these ETFs and index funds and all that at some point. But to keep it simple, the ones that are traded the most, or invested in longer term, I should say, are VTI, VOO, and then SPY. And if we go and take a look just at all these, I mean, here's SPY, here's VOO, and here's VTI. So you can see they all move pretty similar. At the end of the day, VTI is one of the most favored ones by longer term investors because it's not just compiled of the S&P 500, it is the total stock market, so to speak. So there's like over 3,600 stocks that make up this fund. However, the actual S&P 500 makes up like 75, if I remember right, like somewhere around 75% of this fund, and then the remaining like 3,000 or 3,100 companies only make up about 25%. So sometimes you'll get a little bit of a bigger move, depending on like how small caps and all that do. So let's see, on Friday it was down 3.19%. If we take a look at VOO, it was down 3.07. So you're talking about 0.1% difference roughly. SPY was also down 3%. So you can see, I mean, overall they trade within roughly 1 to 0.2% of one another. I will say SPY has a slightly more expensive. It's about like say you were planning on holding SPY for a whole year, it is somewhere around twice as expensive in terms of fees and whatnot. But again, it's still fairly low. It's like 0.09 or something like that. So nothing really that's going to hurt you per se. But me personally, if I'm looking to hold something longer term, VTI is the one that I like, because I like that total, like you have the total market essentially that you're invested in. And not to mention it's a lot cheaper. It's $127 right now. It was as low as $109 recently. So this is definitely one to keep an eye on if you're looking to get into the markets for the first time, you're newer. A good Roth IRA, 401k if you can. If you have like more so like a self-directed 401k or something like that where you can pick your funds and whatnot. But for sure, like Roth IRAs and all that, this is one that I would definitely look at longer term for sure. And I think you can also get on like Google. It'll compare all the different funds and whatnot, like in terms of dividend yields, all that good stuff. Which most of these, by the way, are somewhere around 2%, in case if you guys were wondering about that. So, and I just noticed actually we had a cross on our 1 hour chart that is slightly bullish, honestly. Let's see, pull up our, so when we take a look at the, I guess we'll look at 4 hour. So we're getting a few signals that are a little bullish, but they're shorter term. I mean, obviously, if we look at like the daily chart, we've got a long way to go. We're actually having a bearish divergence right here on the daily chart. So there's going to be a lot of conflicting things when it comes to indicators right now. But either way, if you're investing longer term, it doesn't matter. This is still going to be a great buying opportunity. Say we retest close to the low on VTI, for example. Let's just say you got in at 112 and it fills the gap in the next, let's call it 12 months in a year. Say we fill the gap to just, we'll say 170 to keep it simple. So you got in at 112 and, or let's just say 115 to keep it simple. So 115 to 170, that's a $55 point move to the upside, divided by your $115 investment, 48% return on your money. And that's if it happens in a year. It could happen a lot sooner. It could happen in 2 years. Even if it happens in 2 years, where you're looking at 23% per year. Not to mention your 2% in dividends that you're going to get on top of that. So, man, like I say, guys, it's an amazing buying opportunity. No matter where you're getting in right now, my opinion is to just slowly put a little bit in ETFs and stocks that you like longer term, all that good stuff. Because just nibble. Like I said, just nibble. On those red days, just put a little bit more in. Another red day, put a little bit more in until you're, I guess, out of money, so to speak. A lot of us are going to be getting those $1,200 checks before long, apparently. I'm probably going to invest mine. If we're not going to put in the emergency fund or buy an AR-15 or anything like that with it, then we will be putting in the stock market and putting it to work. Because if you look at a compound interest calculator, which I actually did the math on this in my compound interest calculator, which if you don't have it already, just search compound interest calculator on your app store. It's like a little green icon, green and white icon that'll show up. And like for us, for example, we would get roughly $2,400. It's either going to be $2,400 or $2,900 with our baby and whatnot. But if you just take that $2,400, assume that you're going to compound it by 12% on average, your average yearly rate, and say you keep it in there for 40 years, you're going to have $300,000 after 40 years. And that's if you don't add a single thing to that investment. You don't get a higher rate of return than 12%, which over a 40-year period, 12% is a pretty good rate, honestly. I mean, a lot of funds and whatnot only do somewhere around 8 to 10, but there's a lot of funds that do between 12 and 15. So I always say 12% just as a rule of thumb. But yeah, I mean, literally, if you didn't touch that for 40 years, it's going to be worth like $285,000 to be exact. And again, that's if you don't add a single damn thing to it, guys. If you get to the point where you're financially stable enough to hold it and add, say, like $500 a month to it, After 40 years, you have $6.2 million. That's $500 a month, which happens to be the average car payment in America, coincidentally. So I don't want to go down that rabbit hole right now, but I can't stress enough, if you are able, if you're lucky enough like me to be able to still pay your bills and everything, you have your job right now, all that good stuff, and you get this $1,200, put that money to work, guys, or get your emergency fund started. Just don't waste the money. I can't stress it enough, because it can literally help your future so much, so much going forward. $200,000-$300,000 just simply by putting that money in a good, even just ETF or mutual fund or index fund, something like that. $300,000 from 2,400 40 years ago. Compound interest is amazing at the end of the day. That's all I gotta say about that. But flexible grid, take a look at everything that I'm looking at. I'm looking at BX. I was kind of debating between, do I want to invest in BX or JP Morgan? I went with JP Morgan, but I might buy some Blackstone if it drops. It's a little high right now for my liking. You can see it came all the way down to 33. I really wish that I had held my position. I had like 5 to 10 shares. Sold them at like $40 or something like that, and obviously it popped up to like $50, $51 recently. Just goes to show, if you hold longer term, you're going to get much better results than just simply day trading, swing trading in a lot of cases when it comes to stocks specifically. But if BX, if it can come back down and retest that 30, like not $30, but in that 30s range, like $37 to $39, I might buy a little bit. Earnings are going to be coming up on the 16th. That's a whole nother ball game that we need to discuss in about a week, because earnings is going to start back up here in the next 2 weeks, and that could also continue to drag us down potentially, not just in Blackstone, but just the overall markets, because obviously earnings are going to be ugly. But at the same time, a lot of us are wondering, is it already priced in? Are we already pricing in bad earnings, because we know this whole year essentially is going to be a wash for earnings in most companies, depending on how long this coronavirus lasts, but for at least the next quarter or two, earnings are going to just get washed essentially. So it's going to be interesting to see if that's kind of priced in already, or if we've got more room to the downside to go. Me personally, my gut's telling me that it's already priced in. Most stocks are down 40-50%, some more, some up to 70% in a lot of cases. Like, take a look at Delta Airlines, another one that I'm in right now. It was up to $63. It fell all the way under 20. I mean, that's cutting 2/3, so 60-70% that it's down. What was that other one? NCLH, right? Yeah, Norwegian Cruise Line, the other one that I'm in. We're talking a stock that was up near 60, and it dropped all the way down to penny stock territory at $7.03. So, I mean, how big of a drop is that? That was about $52, $53. We'll just call it 52 divided by 59. 88% decline. I mean, that's ridiculous, man. But like, again, that's why I bought a few shares, because am I betting that Norwegian's going to just bounce back up to $60 overnight? No. But if I buy a little bit and hold it long term, and honestly, I'll probably buy a little bit more if it comes back under $10. Say I'm only holding like 25 shares, and this thing shoots back up to $60 in the next 2 or 3 years even. I mean, that's a good return on your money. Say you just bought 25 shares, again, super small position, but $25 per share times a $10 position, that's $250. And let's say it comes back up to, let's just say $50. So you made 5x on your money, essentially, because 10 to 50 is obviously 5x. So 5 times your $250 investment. Again, you're not going to see a huge return or anything from a term of dollar standpoint, but if you can tell me that I can turn $250 into $1,250 by holding something for 1 to 2 years or 3 even, I'm going to take it more times than not. So it's definitely a stock picker's market at the moment, but if you're not comfortable with individual stocks at all, which most people shouldn't be touching individual stocks. I mean, let's just be honest. 78% of people that try to pick individual stocks pick the wrong ones, panic sell because they don't understand what they're investing in. But if you take the time to break down the PEs, where the stock seems to be going in the future, sticking with good long-term companies that you know are going to be around 10, 20, 30 years from now. Obviously, we know guys like this are going to be around long term. Obviously, we know guys like this are going to be around long term. So on, so on. You just want to stick with don't get caught up with picking stocks like this. Don't get caught up with that crap. If you get caught up with the penny stock game, you better be just day trading them, because even then you're probably going to lose your ass, because penny stocks, it's like you're buying lottery tickets essentially. It's just not worth it at the end of the day. Just stick with good, solid companies with great balance sheets, all that good stuff, and just don't panic sell. And if you don't know what you're doing, then just don't invest in it. If you don't understand what you're investing in, do not invest in it, because the moment it starts to go down, you're going to panic sell. And then you're going to look back a few years down the road and go, wow, that was stupid. If I had held it, my money would have went up 3 or 4x or whatever amount, 20, 30%. But that's pretty much all I got. I mean, let's take a look at overall just the broader markets at the moment. See if we got any pre-bidding going on. Let's see. We closed at 25. We finished just above 2,500, which was a critical level. Bids before the open look to point a little lower. I want to take a look at the Dow as well. Let's see, looking to open just under 21.3 at the moment. Another thing that some people look at, which I'm not too big on, but some people take a look at this weekend Dow. It's pointing to about 150, 100. I've seen this somewhere as low as like 200, but it's pointing to 100 to 200 point drop. Some people say once Sunday rolls around, this thing tends to be pretty accurate. But I personally, like I said, I'm not endorsing it or anything. I've never used it before, but I did look at it this weekend just to kind of see. I want to put my own test to it and see how much it actually correlates with the market open. But yeah, like I said, guys, that is pretty much all that I got. Like I said, I didn't have a whole lot really going on this week. Did do a little bit of trading. I'm trying to figure out how I can pull up my old trades and whatnot for you guys. If you're in our Discord group chat, then you already know, because I pretty much post all my trades in there. But like I said, this week it wasn't a whole lot. We were up at a high of about $30 to $35, and then at a low we were up only about 12 to 15. But we finished the week up about $23 overall. And I did not even have the whole $1,500. I was just slowly piecing it in. I had $500, then I had $7, then I had $9, and then I had $15 by Thursday. So I was really only trading with about $500 to $700. So I mean, if we look at it from a percentage standpoint, I finished up about 22. We'll just call it $22 divided by trading with an average account of $700. Up 3% overall. And again, like I said, I've been keeping it super small on top of that. I think the most money I had in the market combined at one point was about $500, $500 or $600. Because like I said, right now is the time to be keeping it super small. And now I'm starting to get to the point where I'm slowly starting to nibble on stocks and companies and ETFs and whatnot that I'll be liking long term. If the market opens up low enough, which who knows if it's actually going to or not, but if the market opens up low enough overnight tonight or into tomorrow, I might even look at purchasing some of that VTI that we were talking about a little bit ago. I'd like to get this under $120, somewhere around. Yeah, I would say around 115 to 120 is where I'd like to start nibbling on this a little bit longer term. Another one I'm looking at is it VBK? Or not VBK, XLK. I thought I put that in my watch list. The technology sector, another one that I'm watching longer term. I thought I had it already, so I can add that to ETFs. And obviously, I think VBK is just that's the small cap. What is there? Is it VWO? There's a Vanguard one as well, and apparently, I don't know if I even have it in here. It might be VGT. I bet that's it, VGT. Yeah, VGT is the technology one for Vanguard, and obviously it's $208, so I look more at XLK. It's only $70 to $80 at the moment, and again, these are going to move pretty close to one another. That was down 4.5%. This was down 4.42. Again, they're moving pretty similar. It's all about how much capital you have at the end of the day. Again, their fees are fairly close to one another. So it doesn't matter if you roll with Vanguard, if you roll with Spiders, whoever you decide to roll with. For me personally, it's all about the capital requirement, because obviously we want to keep our position sizes smaller. When you're investing in kind of like these ETFs and whatnot, it's not as big of a deal, because obviously ETFs, index funds, all that, you're looking at holding longer term. But I like keeping everything relatively small in terms of account size and whatnot. So say I bought one share of this for my personal account. Say I bought it at $75, which is the highest I would purchase this at, the XLK. Say I bought a $75 position on a $1,525 account. It's 4.5, almost 5% of the account. So again, that's a decent size of your account. If you're looking at a total portfolio, I would like to have that closer to 2%. But again, if you're planning on holding these longer term and you're talking more index funds, it's different with ETFs, index funds, and whatnot versus actual stock. With actual stock, you want it to be for sure no more than like 5 to 10% of your total portfolio for a specific stock. And again, that's why my position's super small. I mean, DAL, we have $41 of buying power effect. JP Morgan, it says 63. That's not right though. I wonder if it's going based off of margin here. It shouldn't be. But $91. Coca-Cola 42, NCLH 12 times 5, obviously that'd be 60 roughly. SDAO, again, very small position there, but even that, I mean, say I got in at $45 per share divided by a $1,525 account. That's still a almost 3% position. So that's a perfect size for a short position on your portfolio. I would not say to go over 5% in terms of short if you're just using that short to hedge your portfolio, because you don't want a huge you don't want a tenth or 2/10 of your account going towards hedging. You just want a small position. That way, again, if the market goes down, you can at least have some profits still coming in while you continue to look to buy other stocks on sale, of course. So I like that position there. I might even hold it for a while, just see kind of how the market plays out over the next month or so with earnings coming up. But yeah, we'll just kind of see what happens. We got about 10 to 15 minutes now until market opens. I'm not going to be staying on for market open. I actually have to grill up dinner tonight for us, but just trying to see how our bidding activity and whatnot, bid and ask activity is looking. So far, it's pointing to about a 10 to 20 point move down. And on the Dow Jones, you're looking at now about 50 to 100 point move to the downside. And I'm sure that will fluctuate a lot here in the next 10 minutes leading up to the open at 5 p.m. Central Time. So looks like our stream has still been doing pretty healthy overall. I'm going to go ahead and get ready to hop off here, guys. Like I said, if you're not already in our Discord group chat, I will pull that up for you guys really quick. Like I said, you can get that for your Android smartphone, all that cool stuff. It's totally free, easy to join. Like I said, it's being weird about scrolling. I don't know why. It's giving me lots of issues. about scrolling. But like I said, there's like 150 of us in there right now, and it's just awesome to just communicate with a bunch of you guys, like-minded individuals, just looking to make money in the markets at the end of the day. And that's in the description box. Again, totally free. Don't charge for anything associated with this channel. And if you like the stream, definitely make sure to smash the thumbs up button. I greatly appreciate that. If you didn't, feel free to hit the thumbs down. Either way, I just want to get feedback from you guys. And if you see this video after it uploads and you have any questions or comments or anything like that, just shout it out in the comments below. And then lastly, of course, if you're new to the channel, we'd love to have you here. Definitely consider hitting that subscribe button below and hitting the bell icon. That way you will be notified every time we go live or upload another video. But with that, I'm going to go ahead and hop off. Hopefully you guys had a green week this week, and hopefully you'll stay green going into this next week. Like I said, just keep the position small. Just keep nibbling bit by bit. And hopefully we will all end up making money in the long term. But until next time, guys, keep on going out there, making your profits, covering your profits, and achieving your financial freedom this year. And I will see you guys in the next stream. Until then, take it easy, guys.